Bitcoin's going to hit a numerically interesting number. Now, obviously, I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason.
Yeah,
we're going to hit that level, and then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything.
Following Trump's election victory, Bitcoin experienced an explosive rally, surging from 70K to 110 DER, driven by expectations of increased money printing and favorable policies. However, the pace of credit creation did not meet market expectations, leading to a correction back to $76. Hayes attributes this pullback to a temporary disappointment in liquidity conditions rather than a fundamental shift in Bitcoin's trajectory. Looking at the broader macro landscape, the United States remains the key driver of global liquidity. Every major financial market reacts to changes in U.S. monetary policy. Hayes identifies a crucial shift in the Federal Reserve's tone during its last meeting. Fed Chair Jerome Powell, who had previously maintained a hawkish stance on inflation, suddenly changed his rhetoric, signaling a more accommodative approach.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things, and I think a lot of this, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations, and that's why we had this pullback from 110,000 to we got to a low of like 76,000 last 2 weeks, whenever it was.
Yep.
And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the U.S. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting, where prior to this he was pretty antagonistic towards Trump. I'm staying. I'm independent. Inflation, we're going to fight it. Don't fucking talk to me on interest rates. I'm going to do my own thing, right? I'm here to solve inflation. Shut the fuck up, Trump. Like, I don't care about your policy goals. But then in this press conference, there's a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting. I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS QT, U.S. Treasury quantitative easing, because now you're effectively buying treasuries with printed money. That's very positive for dollar liquidity as crypto investors. If Trump does 50% or he does 2%, it doesn't fucking matter, because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things, as I sort of thought about it and listened to some other commentators, made me extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower. Bitcoin's going to hit a a numerically interesting number. Now, obviously, I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason.
Yeah,
we're going to hit that level, and then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio. I don't think you should really trade based on a particular price target. It's more, how do you think the expectation of what fiat liquidity growth has to happen to justify this price versus the reality of what's going on and what the politicians and the central bankers are actually saying, right? Because in November of 2021, everybody thought the moon, we're just going to keep printing money and blah, blah, blah. And then, Powell said, hey, we're going to start tightening money. I think it's at the December meeting, we're going to start raising interest rates in March. And essentially around that time was the peak of the market, right? So I don't think it's a number we should have in mind. It's, do the central bankers and the politicians think that they've gone too far in this sort of fiscal expansion, money creation? And when that zeitgeist changes in sort of the TradFi markets, we have to be cognizant of that. And then regardless of where the price is, it doesn't matter what the nominal level is of the things in your portfolio, you have to get into safety because it doesn't really matter at that point.
Historically, April is a tough month for markets due to tax season in the U.S. Tax payments lead to liquidity drains as individuals and businesses sell assets to cover tax liabilities. Additionally, the U.S. Treasury's handling of the debt ceiling and its checking account balance, TGA, can have significant short-term liquidity impacts. Hayes speculates that Treasury Secretary Janet Yellen and Powell may coordinate to maintain liquidity conditions by adjusting how the Treasury manages its cash balance. If the Treasury decides to keep its checking account balance low and rely on borrowing from the Fed, it could create a net positive liquidity effect, benefiting Bitcoin and other risk assets.
So I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bearer asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold.
Yeah,
gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building and sort of technological developments were much more rapid. These days, the amount of change that happens to Bitcoin core is quite small. And obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. And so that's why I spend all my time looking at liquidity, and that's all I care about. And so if it's a 4-year cycle, it's a 4-year cycle. But if it's not, it's not. I think M2 is such a convoluted measure because it's defined differently in every single different country, and reported differently. And so I try to keep things as simple as possible and track the least amount of variables. And so right now, all I'm looking at is the United States, China, Japan, and Europe, and so EU. And that's all I care about. And obviously there's a lot of other central banks and countries out there in the world, but those are the four major ones. And I track bank credit. So how much credit is being emitted by the banking system? That's somewhat difficult in a lot of jurisdictions because of how infrequent the data is published. And I also track central bank balance sheets. And usually most central banks report that on a weekly basis. And what are they saying about what their plans are for the future and how they're going to change whether the price of money, the interest rate, or the quantity of money, quantitative easing, money printing, all those sorts of things. And so that's kind of what I look at. April's a tough month usually because you have tax season in the US. So April 15th is tax day. When you pay taxes, you sell things. There's that. There is the sort of the debt ceiling issue. Obviously, when the Treasury runs down its checking account, that's a positive for liquidity conditions. However, on the flip side, once the debt ceiling is resolved, usually they refill their coffers. So Bessent has a choice. He could run down that Treasury's account and then say, actually, going forward, we're no longer going to run an $850 billion balance in our checking account. We'll just run it down to zero. And if we need more money, we'll just borrow it from the Fed. They could do that. Again, it's a policy choice. It's how well do Bessent and Powell get along and want to coordinate sort of the best way forward to achieve Bessent's goal, which is I want a low 10-year Treasury yield. If Bessent wants a low 10-year Treasury yield, Powell is doing his part by reducing QT, hitting at QE for Treasuries, saying that inflationary effects of tariffs are transitory, meaning he can get to keep doing what the fuck he was doing before. And maybe Bessent is going to come out in the next quarterly refunding announcement in early May and say, actually, we're going to run down the TGA to zero, and then we're going to keep it there because anytime we need extra cash, we'll issue a bill, a Treasury bill, or we'll just go borrow from the Fed and then pay them back later when we issue some more bonds.
While many investors focus on specific Bitcoin price targets, Hayes warns against trading based on arbitrary numbers. Instead, he advises monitoring the broader liquidity environment. However, he does speculate that Bitcoin will reach a psychologically significant number before the next major cycle shift, whether that be 250 KLers, 500 Ks, or even higher. Hayes also cautions that at some point, liquidity conditions will shift and the easy money environment will reverse. At that moment, Bitcoin holders should be prepared to exit and seek safety, regardless of the nominal price level. The key is recognizing when central banks and politicians believe they have overextended monetary expansion and begin pulling liquidity out of the system. Please like and subscribe.